Hi there, folks. Welcome to Economic Observations. My name is Chris. Today is Monday, September 20th. I hope you all are well. Thank you so much for watching. This video is sponsored by the Tanzania School Foundation, a nonprofit near and dear to my heart. There are links in the description below should you want to learn more. Let's get started. Today we're going to talk about, Evergrande and the potential collapse of the Chinese empire. It is the second largest real estate company in China, and it has over $300 billion in debt that it may default on. A lot of people compare this with Lehman Brothers. When Lehman Brothers collapsed in 2008, it had $619 billion in debt. So it is about half the size of the Lehman collapse, but it is still catastrophic, and it could ripple across the whole world. We are in a global market, and we've seen the market decline by 2% today, both the Dow and the S&P, as well as all cryptocurrencies. So this is going to have major effects. I also read that Sinic Holdings, another Chinese developer, was down 87% today in the Hang Seng market, which is the Hong Kong Stock Exchange. The Shanghai market was closed today and tomorrow due to a holiday, the Fall Festival. There are ramifications in that. They have a 9.5% interest payment due on a few $1 billion in October, and investors are worried that they will not be able to pay it back. There is also another real estate developer, R&F Properties, also in Beijing, and that too had a major sell-off today. So it is some space to watch. I notoriously tell people that you should only invest in the stock market what you can afford to lose. There were a lot of losers today. There were a lot of margin calls and a lot of people losing a lot of money. I hope it wasn't one of you. Just be leery out there. I talk about people borrowing money and investing it in the stock market. Not every stock is a winner. As a matter of fact, there are many more losers in the stock market than there are winners, and just be careful. On Saturday, I was talking to a few investment people who do some day trading. The majority of them are holding on to cash right now. They are a little skeptical of everything that's going on. I know that people feel that if you're not in it, you can't win it, but it is like going to the casino these days. The stock market is a big risk right now, and I hope it wasn't you that had one of these margin calls. If you saw what happened to Iceland in 2008 at the same time of Lehman Brothers crash, you will know that the ripple effects of the global economy can have huge impacts all around the world. Investment advisors all across the world are invested into these high interest payment debt securities, right? These bonds. They pay out 9.5%, 8%, whatever it may be. A lot more than a bank would give you. And a lot of these investment advisors hold pension funds for many of, all the, teachers' retirement funds and police and firemen across the United States and even Europe. They play with your money and they invest it in these high-risk instruments because there is no other place to put the money right now, right? If you invest your money with Fidelity or Goldman Sachs Asset Management or Alliance or BlackRock or any of these companies, they invest in these risky securities to give you the return that you want. There's no easy 4% anymore on interest rates. Interest rates have been low all around the world. And people want returns, and they want customers. So the higher their returns, the more customers they will get. And what kind of effect can that do when things start to tumble? The stock market could take months to go up, but it can take moments to come down. And I think we're heading that way. Don't borrow money to invest in the stock market or into cryptos. It's dangerous space right now. Only invest what you can afford to lose. And if you need money right away and it's in your retirement, I'd put it somewhere safe, even if it's gaining only 1%. It's better than losing 50%. I worked on Wall Street for 25 years. I've seen the stock market go up, and I've seen the stock market come down. Yeah, and you got to be in it to win it. It's like going to the casino. It's like going to the blackjack table or throwing your money on a roulette wheel. I won't do that. Look at the price of silver. The dollar is really strong, and the price of silver went down. And historically, when the dollar is strong, gold and silver come down. And the dollar is strong right now. But when the dollar weakens, that's when gold and silver go up. Be on the lookout. There's a lot more to this story. Evergrande's debt is due on Wednesday, and we will see what happens then. Will China bail them out? Anyone's guess. Some people say they won't let them fail, and some people say they will. I have no idea. Anyway, there's a lot to go on in this space. They're calling it a contagion. Sounds familiar, huh? On Saturday, I was at a market selling our beautiful African art, and I was talking to a few people that came in and were telling me that I should do NFTs. So I've been doing research on NFTs for a couple of weeks now. I am so overwhelmed by an NFT. If any of you have created NFTs and have sold NFTs or are thinking about it, I would love to hear from you because I am taking some of our beautiful African art and animating it, and they are coming out fabulously well. And I am using a little bit of my creative side to learn something new. But the whole NFT space, well, wow. There too, there are some winners and there are some losers. But like 6 people came up to me a couple weeks ago and said, NFTs are the place to be. NFTs, it's all about NFTs. Overwhelmed by it all. So if you know anything, shoot me a message. I'd love to hear from you. All right, as always, I appreciate you. Hey, if you can hit the like or subscribe button, I'd really appreciate it. We'll talk again real soon. Don't forget, call someone, tell them you love them. Be kind, folks, and have a great day.